for today. Okay, all right, let me go ahead and share my screen. Okay, so you should be able to see this chart here. So what I wanted to do today is I've been getting some questions about the indicator. It's there's a lot of different functionality that it has, and just getting it set up, analyzing the signals. There's some specified criteria when I designed the signals that you want to adhere to if you want to have the highest level of success. And some of that stuff is not, easily communicated just through, just through Discord or otherwise. So I wanted to host this class to get you to see that. And then I also want to take some time towards the end for questions. So if you want to see some additional charts that I didn't show, or if you have just questions in general on the indicator, how it was developed, or anything else, then I'm willing to answer those. So first thing I want to discuss to kind of start from the very beginning and then walk through everything chronologically. So if you sign up for the indicator through WAP, it'll have you input your TradingView username. So your TradingView username is just going to be at the top left corner here. It's going to be, if you use a Gmail, it's going to be whatever you have in front of the Gmail. Otherwise, if you have a specific username, you can find that there. So once you put that into WAP, it's going to automatically add you to the indicator. You may have to restart TradingView in order to see it, but if you go at the top here to indicators, you should have an additional tab right there. And then if you click on Zack Attack and give it a few seconds to load, it'll automatically add it to your screen there. So a few things to preface before we get started is what I have here on my screen is a little bit, here, let me make sure everyone's muted. Okay. Yeah, please mute if you have your microphone on. So what I have right now, I feel that it works best if you have extended hours on. If you don't know how to do that, if you just right click anywhere inside the white space on TradingView, and then you go into settings, and then you look at the symbol tab here, you can change from your session from regular hours to extended trading hours. And this is important because one of the signals, the long and short signals, one of the criteria is your EMAs. And if you omit pre-market and post-market, then inherently your EMAs are going to be a little bit different because you're missing some price action. So the signals will vary whether it's extended hours or regular trading hours. So I have extended hours on. And in terms of real-time data, you're going to want the best real-time data that you can get in order to ensure the signals are the most accurate and that your market data is it's real-time, it's not delayed in any way. So if you go to the top left corner here and then you go to account and billing, you can actually add additional market data.
No,
Sorry about that. So you can actually add additional market data, and what I would recommend adding is if you trade, anything in so that the S&P 500, if you're only concerned with that, you can add ARCA. There's a lot of different bundles. If you trade futures to get the real-time data for futures, you're going to want to add anything with CME Group. So that'll get you your NQ, MNQ, ES, MES, all of those. So you can just add the real-time data there. I know ARCA is $3 a month, and it's definitely worth it because I've noticed that the data is more reliable. So that's how you get your market data on there. So if we go into the actual settings, I'll show you everything that you can configure. So some people are curious, hey, if I don't really care for pre-market signals, I only want signals in a specified time frame. So if you go here, for me, I'm on Eastern time, right? So for me, the pre-market session is, the market session is 9:30 a.m. to 4 p.m. Eastern. So if I'm not concerned with anything pre-market, if I change my trading hours to only be the market session, which is 9:30 to 1600, which is 4 p.m., and then I just hit OK, it'll take a few seconds to load, and then you'll see all my pre-market signals completely disappear. And this is important because when we create alerts, the alerts are based on whatever is showing on the chart. So, sure. So whatever's showing on the chart. So if I, set my alert with pre-market session on, then I'm going to get a bunch of alerts during the pre-market session, which I do not want. So that's how you set your trading hours. I'm going to go ahead and bring them back to the regular time frame here, which is 24 hours. So if you do any interval of the same time, any 2 times, it's going to automatically be, 24 hours. So you're going to get all the signals. So your EMAs, so the ones that are in the indicator, the ones that I found work best on the shorter time frames, like the 5-minute, the 10-minute, etc., are the 9 and the 21 EMA. So the fast EMA, quote unquote, that white line is the 9 EMA, and then you can choose whatever color you want. By default, it is white for the 9, and then it is blue for the 21, so you can configure those colors. So the idea behind the EMA cloud, which is the next settings here, so when your EMAs, Whenever the 9 crosses below the 21, it can be considered a shift in trend, right? Because we have the 9 EMA is our shorter time frame trend, the 21 is our longer time frame. So when we see the shorter time frame flip bearish relative to the longer time frame, then that could be seen as a trend shift. And so what we have here is that we're filling in all the white space between our bearish EMA cross here with red, and then all the white space on the bullish side with green. It's just something helpful that helps you to visualize trend, right? If you right away, if you're more of a visual person, you have the EMA cloud to give you those colors. Now,
YouTube.
okay, please mute. Thank you. All right, so for automatic support and resistance, so this is pretty important, and why doing a video is super helpful, because what you can do with these automatic support and resistance levels is you can actually choose the frequency that they appear. So this look back period is how you're able to dictate how much, sorry, I'm leaving my side. So the look back period is how you're able to dictate how many lines are actually on the chart and how frequently the support and resistance lines will replot. So the look back period, if you think about it, it's how many candles it's looking for before it plots a level. So if you're looking at 15 candles, you're going to get, levels for that. If you shrink that look back period to 10, then every 10 candles you're plotting a new line. If you shrink it to 5, every 5 candles. So the shorter that look back period, the more lines you're going to have and the more frequent your support and resistance will get plotted. So if I just shrink this down to like 9, you'll see that we're getting more support levels. If I go down to 5, you can see we have even more. And if I keep going down, you'll see the level of the number of, now it's getting a little overwhelming. So what I found is, yeah, this is quite a bit here. So what I found is the perfect medium is 15. So 15 will typically give you about 4 or 5 key points of support and resistance. So right now what I'm looking at here is Amazon. And you can see that there's some significant support and resistance that's plotted here. So if we take a look, let me get my tool here. Okay, the zoom thing is in the way and I don't know how to minimize it. So let me just find the arrow manually. Okay, it does not matter. I think you can see my cursor. So you can see that this level right here was a strong support, and then it flipped into a resistance where we had this bear flag and continued to the downside. And so the indicator is able to recognize these important levels and it's able to plot them automatically. And the cool thing, if I show you using the replay mode here, right? If I replay price action, you'll actually be able to see how these levels dynamically shift as price develops. So just keep an eye on the chart and you'll see how these support and resistance lines will shift just like that as price developed. So you saw here, this area flipped into resistance. We pulled back on Amazon here. We pulled back and tapped this resistance level here that was previously support that was automatically plotted at 178.98. We had a rejection here. We closed below our EMAs, and then we actually continued dumping towards this support level here. So you'll see as price develops, these will shift to give you the most accurate and relevant levels. So that's how you use the automatic support and resistance. If we go ahead and scroll down here, if you don't want these labels, so what it does is anytime a line shifts, it doesn't actually, it keeps the timestamp there or the price stamp there. So if you want to go back and add the level, you can do it yourself. So one example that we can use here is this level of 178.26 was a support here, which is where this candle bounced here and we had a pivot, and it marked it earlier in the day, but as price developed and broke through that resistance, it went ahead and replotted a more relevant level, but it still left that tag there. So if you want to replot the resistance or support yourself, you can just use the line tool in TradingView and then you can go ahead and do that. So I can add those manually. That way it's more efficient when it's using the space. So it's not going to have, 100 lines on your screen. It's only going to have a few lines, 3 or 4. And then if you want the old lines back, if you think they're actually still relevant support and resistance, you can go back and replot them yourself. So that's how that works. And let me scroll down. If you want to get rid of those labels, it's pretty easy. If you just uncheck this show support and resistance labels, then you'll see those will disappear. So you don't have to worry about them. I'm going to go ahead and add them back here. And so for these long and short signals, what we can do is depending on, if you're on mobile or desktop platform, the arrow size can be modified. So for those mobile traders, the way I had it before, the arrow size on the long and short signals was pretty large. And so I kind of built in the functionality that you can change it So if you're on mobile, you probably want to use the small arrows. If you're on desktop, you can use these larger arrows that are very easy to see. But for now, I'm going to keep that on small. And then we're going to talk about this PR signal. So a lot of people are a little bit unfamiliar with the PR signal and what it signifies. So the PR, it just stands for potential reversal. And what it is, it's a trend exhaustion signal that what it looks to do is it looks to aim to find the points that we have a pivot or a shift in trend at the very exact time they happen. So if we use an EMA-based signal, the only issue with that is that it's a little bit delayed in nature because by the time we have that shift in trend, price has kind of already been moving in that direction for a specific period of time. So oftentimes we do have a trend flip that can, reverse after the signal happens. The PR signals don't use EMAs in any capacity. They look to catch that reversal just based on price, volume, and trend exhaustion, right? So it's looking to catch it right away. And what's helpful, if we look at, for example, here on Amazon, we were able to catch this PR here right at the top, right? So you can see that we had a resistance level starting to form. You can see it's marked actually at 182 in gray. So that means it was previously on the chart. So let me remark that 182 level that was generated by the algo. You can see here we tried to break through that level and we failed, right? So we tried to break through that level multiple times. The first time we tried, we failed and we got that PR signal, and then we tried a second time and we failed and we got some confirmation that we couldn't break through that area. So once we get that confirmation that resistance can't be broken through, we have that PR signal. The way that I like to take these typically is I'll make my risk the top of that the candle wick on the PR signal. So if I just draw a horizontal line here, I can call that my stop loss. And what I'm looking to do is I'm always looking to take these PR signals to the EMA cloud. So this is important. So the PR signals are not meant to be held for a long period of time. They're kind of meant to be a pullback indication, right? So we'll pull back into the next level of support. So the way that I like to play these is if I see that PR signal, I'll look to take that into the EMA cloud, right? So here on Amazon, we enter there. We saw that we failed to break from out of this resistance. We got the PR signal, so we look for a short scalp into the EMA clouds, which also happened to sit on VWAP and some demand zones here. So I took my profit on that initial dump candle. It did continue all the way down to this support level and this demand zone before we bounced into some more supply, and then we got a short signal and we continued downward. So let's take a look at the rest of the signals that happened throughout the day. So this short signal came a little bit later. So once we closed below this demand zone, we got this short signal. So with these short signals, it's the same idea. What I look to do is I will look to take it to the next level of support. So if we look at the next level of support following the short signal, well, we see here on our chart, our support is at 178.26, right? So I'm going to draw 178.30. It's close enough. So let me go ahead and actually replay it so you can almost kind of see how it would look in real time, which I think will be more helpful. All right, so we get this short signal, and I want to analyze this in a little bit more detail. So when we get that short signal, we have to take a look at what else is happening. So here we get this bearish engulfing candle that closes below this really, I guess this is a good demand area to look at because it was respected multiple times, right? We bounced off of this demand area at the beginning of the day, and then we retested that demand area and we bounced, right? So this is telling me that this is a strong level of support. So if we close below that level on significant volume and with a bearish candle like this and the short signal, then I'm looking to take a scalp to the downside. So I would enter my Amazon puts here. I like to use the EMAs as my stop. So if we closed above the EMAs, I would take a loss here. You could even use this zone if you want to keep your loss a little bit tighter, right? And then what I would look to do is I would look to scalp this to the next support down. The next support is 178.26. So let's take a look at how price develops. So you'll see we retest this supply area here, and you'll see that on the next candle, we can't get past that supply, and we end up dumping through our level here, and we
Dude,
take
you're
profits.
making a fucking mess everywhere.
All right. So we'll go ahead and continue. So this is somewhat akin to a bear flag. We try to pull back and get through that supply zone, but we fail, and then we dump below. And we actually have some continuation to the downside. You can see how we tried to get through this same resistance area, right? It was support at 178.26, and now it's flipped to resistance. Again, we can't get through it. We form a bear flag, and we get some continuation to the downside. So from that short signal, a nice move down, and then from the PR, that was actually a huge move down that ended up calling the intraday top right there. So let's continue. You'll see we're pulling back here into our EMAs. and then we fail to break through them, continue to the downside, and then here we have a PR, right? So we talked about the PR. The way that we like to play them is I will go ahead and draw my stop loss. So my risk would be low of day, right? That's the bottom of the wick on that PR signal. So I'm looking for a bounce back into the EMA clouds. So what we're looking for is essentially a move back to the 9 EMA. So we're looking for a bounce up into the EMA there. And as we can see here, that's a good bounce into the EMAs, right? So we ended up actually pulling up all the way into the 21 EMA there, that blue line, for a nice bounce. So like I said, the reason that I always take these to the EMA clouds when I scalp is because they inherently will be counter trend, right? So if we're looking at the exact point where the trend shifts from bearish to bullish, right, when we start to have an inflection, that's going to be when, you know, the highest point of the trend. So we're very bearish, we're looking for a reversal. So to avoid something like this happening where we're actually bouncing into the cloud and then getting some more sellers to push us down further, I like to take my profits at the EMA cloud, and then I'll just wait for the next setup there. And this actually ended up being a good opportunity for some more upside here. So this signal actually would have ended up stopping me out, and it's a good one to see here, right? I want to show you ones that also don't necessarily work out. So we get this long signal. It actually looks like a pretty decent setup for a long, right? If you take a look at this candle structure, it's a nice engulfing candle following some consolidation here. We have some good volume pickup on that candle. And I would actually just probably try to scalp that into the next level of resistance or the supply area with a stop below the EMA clouds. A couple candles later, that would have stopped me out. But then we get another long opportunity here where we get this bull flag that happens above this level of support. And if you take a look here at this long signal, shortly after we get a large increase in volume, right? So this is leading into FOMC. So we get this long signal here. We probably look to take that up to the supply area or VWAP there. Now it is FOMC, so a lot of this price movement obviously is attributed to that. But we did get the long right before this move up. And what I do want to show here is what happens when we get later on, all right? So pretty significant move up.
Actually by like 5%.
Right, so we get this move up, and then you'll see these PRs, right? So we talked about the PR before. We're going to do the same exact exercise where we mark the stop, we mark the target. So the stop is going to be the top of that candle wick. Okay, and we're looking for a pullback, and the next immediate pullback would be into these areas of demand, or ultimately looking for pre-market high or the EMA cloud. So you can see the next candle pulls back into demand. We do end up seeing some a bounce back up, and we get this second PR, right? So now that we have the second PR, we're going to do the same thing, right? We get another PR. We're going to move the stop up. We're going to look to take this to the downside, and it actually ends up retesting that same area of resistance at 185.15, and we end up dumping after that. So that's how I play these PR signals. I'm going to show you a couple more examples. So if we go to NVIDIA, that had some good ones. Let's go to the NVIDIA chart, right? So again, same idea. I'll go ahead and replay this so you can see it. These were the only two signals on NVIDIA. So if you just waited, this was actually able to catch a nice top and bottom on NVIDIA. So we get the PR signal, right? We have our stop. Now the algo automatically plotted that support there, but the PR candle was this candle right here. So we mark our stop, and then we look for a push into the EMA clouds, which we got, you know, right away. We didn't even have any drawdown, so that one was nice. And what's good here is we actually end up. Let me extend this to a horizontal line there, and you'll see that was actually that bottom of that candle was the exact bottom. You'll see on NVIDIA, this is akin to a double bottom formation. We're getting some volume pickup on the bullish side, and then you see we have this nice move up. And let's, you know, obviously this is going up with FOMC just as the broader market did. And what's nice is this was able to call the exact top on NVIDIA. We can see that we got the trend exhaustion, we got that PR signal, right? We mark our stop area. We're looking for a pullback into the clouds. And there we go, we get that pullback, and it's actually a dump that continues. And then we get that short signal, and then, you know, the markets were closed there. So that was NVIDIA. So you can see that the same idea using these areas is there with NVIDIA. It's there with with Amazon, if we look at other stocks, if we want to take a look at Dell, right, we see that we get this this PR in the day, we get this short signal here, right? Again, with this short signal, this is a bear flag into the automatically generated area of resistance here, right? Before we continue down. Again, we get the long signal here. We can take that to VWAP. Again, we have the PR, and if you draw that line across the PR, the top of the wick, use that as your stop and look for a pullback into the cloud, you'll see that that was also successful. So all these signals are on Dell were successful. If you are a futures trader, we can take a look at NQ. So this is what I traded today. I traded futures, I traded NQ, and then for my options, I traded SPY a little bit early in the day, and then I traded Amazon only once, even though it did have a bunch of successful signals. So let's take a look at NQ. Right, so we can take a look at all these signals if you want. So the first signal that we have here is a PR that ended up, so that's the PR. We're looking to touch the EMA clouds. We got close. Now the second PR was one that I actually didn't take because what I want to talk about is the risk to reward on these PR signals. So the ideal way to take these PR, you'll notice the PRs that work out the best are the ones where trend is really exhausted, right? Trend has been, there's a good amount of distance between the PR candle itself and the EMA clouds showing that trend is exhausted. If we're kind of riding the EMA clouds here and I get a bearish PR here, this one is extremely close to the EMA clouds. Number one, that doesn't bode too well from a risk to reward standpoint because I'm trying to, if this works out, I'm just taking it to the EMA cloud, which is not going to be much of a profit. However, if it goes against me, you can see that we're going against trend, right? You could even kind of see that we were flagging a little bit, right, into the EMAs, and we ended up pushing a little bit higher. Let's talk about the next signal, which was a short signal. Again, this short signal was, there's a little bit of chop earlier in the day, so didn't have the most follow through. But if you take that to the next level of support, you'll see that there. Now, what really stood out was the next few signals. So you can see that, if you take a look at this area here, you can see that we're starting to form some intraday resistance. If you just kind of draw a zone from the top of the candle wick to the candle body, and then you'll see that we had this PR that went off. If I can find the circle tool. So we had this PR that went off accompanied by volume. It was a nice inverted hammer. It was a rejection of this area that we had tried to get through multiple times, 1, 2, 3 times, and we failed to break out of it. So that was showing us that, sellers were strong here. We can't break through this level. We get this this bearish PR reversal. Again, we're just looking to take this into the clouds, all right, into VWAP. So that's a quick scalp there. And then after that, we also get a short signal. And this short signal is nice because it is a large engulfing candle. It cuts through all of our support levels. So you saw VWAP here in our EMAs. It kind of cut right through those and then ended up closing right here. So you can see right away, if we want to scalp this to the next level down, we have a level of support right there that was formed earlier. So we can actually just take a quick scalp down there. And if you want to hold even longer, you can see that we had a nice dump after that. So some good signals there. And then really good one was also this PR signal. So let me do the replay function and we'll look at this in real time. Okay, so you can see if it's pretty easy to see here. If I draw this support area using the bottom of this bearish candle wick, taking it to the candle top right here, then you'll see that we have a support that was created there. And if I extrapolate this out as well, so you'll see that on the next candle, we're retesting the same area of support, and then you'll see that it held, right? So this is the same zone that held here. You see it also held here, and look at the volume on this PR candle, right? So we had a nice increase in volume. The way I like to look at volume is volume kind of indicates interest. So if you have volume drying up, then people are essentially losing interest in whatever is happening. So if a trend loses volume over time, you can say the trend it's not necessarily a strong trend because it needs volume for me equals validation. So once we're getting this nice spike in volume on this hold of this support area, this demand region, plus we get the PR signal, right? Plus we have this nice bottom wick on this candle showing us that buyers are stepping in. It's a bullish hammer candle, which is typically found at the bottom of reversals. This is a great way to enter this PR trade here. and we'd be looking for a push back into the EMA cloud. So you can use, like I said, the bottom of this candle as your risk. However, with NQ, that's a pretty significant amount of risk since we had that large candle wick. So if you want to use this demand zone here and just actually call the bottom of that zone as your stop, that would also be a good stop to have. It keeps your risk a little tighter and it still gives you a good amount of upside into the EMA clouds. You'll see we retest that same area of support that we marked here. Look at that. You know, we get a perfect bounce right off of that same area. And then the next candle is a huge push up into the cloud. So if you're familiar with trading futures, I'm trying to find the price measurement tool here. Might be here. I had it under my favorites. Doesn't really matter, but let's just do it manually. So 17428.75 all the way up to 1458, right? So that's, you know, over 20 points on NQ. For each contract of NQ, each contract for every point is $20. So you can do the math on that. So it's a significant move, even just using one contract. So nice move on this PR. And then, you know, you can see we retest that same area and now see how that same zone held here. I mean, it's held multiple times. That's why it's really important to, you know, as you're going through here, also do your own charting, right? It's nice to have these demand zones, support and resistance, EMA clouds and signals, but also, you know, analyze and notice support and resistance levels that you can draw yourself. And then we have FOMC. So we have this large move up. You'll see here what's nice is we actually have this bull flag. And if you take a look at where we end up, you know, pulling back to, we had a nice demand zone here as well. So it pulls back into demand before continuing higher, and we end up rejecting this area here. So what's nice about these zones is the zones, if the zone is above us, we like to treat it as resistance or supply. So the way I like to see it is it's like a price ceiling. If it's below us, it's kind of like a price floor. So what you can note here is that we rejected this double supply area before we had this pullback. And if you draw the way we've been drawing our resistance areas before, you'll see that we look like we could potentially top out here. We had this rejection of the zones on this. You can see the volume here on this zone rejection was higher than all these other candles, right? So that's giving me conviction that, you know, price is rejecting that area with strength. Look at how we retest that same zone again that we drew here, fail, and then continue the downside. Briefly catch support here on this orange line, which is VWAP at flag, and then we dump again, right? Another short signal here, and we take that, you can see that we pulled back a little bit, and then we kind of consolidate, and then, you know, 5 o'clock or PM Eastern, we close and then open back up at 6. So I think that's good in terms of, I don't want to take all the time just, you know, showing you everything, going through charts, but hopefully that recap of all those signals, showing you how I play them, where I draw my risk, where I draw my reward, going through some popular ones. You know, we looked at Amazon, we looked at NQ, we looked at Nvidia. Those are some hot names. So if we want to take a look at QQQ as well, since we looked at NQ, you'll see we also got some nice signals, right? We got this PR right here before we had this pullback. Again, this bullish PR into the EMA clouds. And then we had this short signal. Next candle was a bearish engulfing that took us down as well. So give you a few charts. Now, what I want to do is if you, SPY, yes, okay. Sorry, I hadn't been checking. So SPY, let me pull up SPY and how to get this indicator. Could you repeat how to install this indicator? Yeah, sure. So if you go to Zack's account on X, and if you click on his WAP link, there is the FU Money Room, this Discord, and then there's also the Zack Attack indicator. If you sign up for the Zack Attack indicator, you get the script. It's going to ask you for your TradingView username. Once you put in your TradingView username, you can click claim this indicator, and then it'll automatically show up here under indicators, invite only. And then you just click anywhere here in the space. You just click on the Zack Attack and it'll add it to your chart. If you don't see it right away after claiming it, just restart your TradingView. That should refresh your indicators and then you will have it there. And yes. Okay, I'm gonna go back to SPY, but first let me address this question on getting the other add-on. So I don't want to open this up because it's actually going to take me to my billing page, and I'm not trying to leak my credit card information. So if you go to your trading view, click on your account, go to just hover over your name, click on account and billing. It's going to take you to your account and billing page. If you scroll down, you're going to see this button that says add additional market data. Click on that and you should see all of them listed there. So you can get ARCA for $3 a month. You can get packages that bundle them and make them discounted. And it's a good thing you brought up SPY because SPY was very choppy and we got a lot of false signals today on SPY. So let's go ahead and expand this and let you see what's going on here. So SPY, we had a ton of chop leading into FOMC. So I'm going to show you guys how I like to identify chop so you can identify that and you can stay away from trading chop. So what I like to notice is just like we were drawing these areas of supply and demand, support and resistance, we can draw these channels and we can see how price is consolidating in a channel like this, right? So just bouncing back and forth. This will make it pretty easy to see. And when we bounce back and forth like this, we end up getting a lot of signals that are saying short here, long here, short here. So it's kind of throwing off the indicator because from a technical standpoint, whenever we have our EMAs are going bearish and then bullish, we're having a lot of fluctuation in a short range, which is not giving us really any follow through on our signals. So if you get the short signal here, you don't want to take it because it's in support, right? Again, we get a short signal here. We're not going to take it because we're in demand or support here. Again, we have long signal here. We're not going to take that. The short one, so the first signal that happened that we actually had some room in our channel to go to would have worked out, right? So all these signals, you had no room to go to the bottom of the channel that we drew here, but on this short signal, you did have some room if you wanted to scalp it to the demand or support area that we drew here. But you can see SPY was super choppy. A few other ways to identify chop is what I like to look at is VWAP. So on stocks that have a lot of movement, VWAP will not be horizontal like this and stay in the same area. So if we take a look at NVIDIA, right, NVIDIA moved quite a bit. So you'll see that our VWAP, notice how our VWAP was just generally trending down, right? And it had kind of like a slope to it. And if we go back to SPY, you'll see we didn't really have much of a slope. We were kind of just sideways the entire time leading up until FOMC. So it's a good way to identify chop. And then you can see once we broke out of this channel, we had a pretty explosive move up. We briefly had some resistance at the zone, pulled back, and then continued ripping up. And what's interesting to note is take a look at where we reversed for the day, right? This is inside a double supply zone, just like it was a double supply zone on NQ. Again, we can draw this area of resistance. We can see that we rejected this double supply zone multiple times. 1, 2, I usually have my arrow tool, but 3, 4, 5. You can see we just rejected this area multiple times. And then we finally, we retested this demand, bounced, rejected this area here, and then just dumped. And then kind of the same price movement you observed on NQ, where we bounced briefly on VWAP and this demand, formed this bear flag, got a short signal. And then after that short signal, we had a little push down in the last 5 minutes of the markets there. So that is kind of an overview on SPY. You are welcome. And do we have any more questions? I think I was pretty in depth on this. So if you have any more questions, just drop them in the chat and I'll get it taken care of. Or if there's any charts that you want to see, I can do that as well. All right, I think we might be good on questions. I'll give it a few more seconds if anybody has any last minute ones. Yeah, so the supply and demand zones are, let me remove these drawings. It's a good question actually, because I think I forgot to actually touch on those. Sorry, did somebody say something? All right, must have been an accident. So if we go into our, I missed a few settings. Okay, so we talked about the PR. There's some VWAP settings here. The key levels, which are your pre-market high, pre-market low, current day high, and current day low. You can toggle here with these labels. The supply and demand zones, you can change the colors. You can actually change the zone size too. So let's take a look at these zones that were formulated here. If we scroll down, we can actually adjust the size of the zone. So if I want this to be a much broader zone, do something like 45 and watch how they expand. I would say keep the zone size at 30 because that's what's been back tested and that's the optimal zone size that I've developed. And then you can also move the labels here. But in terms of where they're generated, if you scroll down here, this is a typo. This should say 4-day prior zones. Basically, what it's doing is it's looking at the pivot points in the days prior. So, yesterday, the day before, going up all the way 10 days before. The top pivot point where we switch from, we had an inflection point going from bullish to bearish, that would be labeled as your supply. And then, where we had an inflection point on the bottom, where we went from bearish to bullish, essentially the reversal point of the day, that would get marked as a zone from that day. So that's where they're coming from. They're just looking at the major inflection points from those days, and then it plots them here on your chart. And what's nice is it's automatic. So as the days progress, as time moves on, it's going to shift your levels for you. So you don't have to keep going back to find those days and then redraw them. So hopefully that answers your question for you. How to determine you're stopping out. Say, for example, last candle, thought it was ideal to wait for candle close before exiting. Yeah, so for my stops, I stop out on candle close, but I take profits as soon as my target is hit. So when you say last candle, I wonder if you're referring to this one. Let's take a look at this candle here. So something interesting about the signals is in replay mode, you can't really see it, but the signals will form in real time. So as the candle is forming, you'll get a signal, and when all the criteria are active simultaneously, that signal will fire. However, if any of those criteria are not met at any point in time during the candle formation, that signal will go away. So I never act on any signal until the candle closes and the signal is intact. And this is because like I said, it can fluctuate. It's a real-time non-lagging indicator. So if you wait until candle close, that's more validity for that signal, and that's where you take it. So for example, here we got the short signal. I wouldn't take it at any point here because it could reverse on me. We have a demand zone here, but once the candle actually closed, it's an incredibly bearish candle. And it broke through all of our support areas here, right? It broke through VWAP, it broke through pre-market high, through our previous day demand. So for me, that's a good candle to go in there. Now you don't want to have your risk at the EMA clouds because we're so extended from them. So that's usually a personal choice, right? Do you want to set your risk here at this zone? So if we break through that zone, you take a loss. Do you want to set your risk here at this resistance area? Totally up to you. But that's typically I will use the clouds if it's a little bit closer. But in this case, since it's extended, you kind of have to adjust your risk to reward based on that. So the volume, I don't have a volume indicator that's part of Zack Attack. I made a custom indicator that it just what it does. Oh, okay. So you're talking about this volume here? No, that's a TradingView default one. So if you just go to your indicators and just type in volume, and then look down here at volume. It's one of the technical ones that's default. So if I just click on that, it'll throw it on my chart. So that one's a free one. That's from TradingView. Anybody can add volume bars down there. I definitely recommend that. Some people will use volume profiles or volume shelves, but for me, I'm good with just a candle by candle volume analysis. Yeah, so I'm recording this. It's all recording, and then I'm going to post it to YouTube, and then I'll put the link in the announcements channel so that anybody can go and view that later on. Let me take a look at ES. Yeah, so the ES, I don't like to trade ES after hours because it's incredibly choppy, right? But you can see, yeah, so if you look at the chart, you can see the ES long here. ES can be pretty choppy after hours, but yeah, so you can see there's a little push, a little move up here after the signal. All right, you can see it pushed up a little bit here. But yeah, so it should be showing up on your chart. I would make sure that you have real-time data. CME market data is probably what you want to have to make sure that you're seeing it. But if it went off in the Discord and it is here on the 5-minute time frame. Yeah, definitely. Yeah, CME. So CME is going to give you futures real-time data. And I think if you don't have it, your data may even be delayed. So yeah, it's a good question on the candles that I look for at entry. So if I'm looking for entry on a long and short signal, my personal preference is engulfing candles. So let's go back to, I like to use Amazon because I think it did a good job. So for long and short signals, I typically like to look for engulfing candles. Engulfing candles are, let me explain it this way. So if I have a short signal candle, I don't want a candle with a large bottom wick. A large bottom wick indicates that buyers are pushing in. So if you take a look at this bearish candle, it did have a large bottom wick and it didn't really have any top wick. The bottom wick is showing us that we get a little bounce at the end of that candle before it closes. So that could indicate the buyers are starting to step in. If I see a short candle here, this candle does not have a bottom wick, right? So it's or a top wick. Really, it's all body. So all body candles are showing you that it's pretty clear who's in charge here and it's sellers, right? So that kind of candle for me gives me good conviction on one of these long and short signals. Now, in terms of the bounce plays, I am looking for those wicks, right? So for the PR signal, I do look for a strong bottom wick and very little top wick, right? So if it's a bullish PR, I want that bottom wick there to show me buyers are stepping in. And if it's a bearish PR, again, I want that top wick showing me that sellers are stepping in. So you can see both of these PRs had that large top wick, very little candle body, and they were both red, showing me that sellers are stepping in and buyers are exhausted. So that's how I look at the candles. Yeah, so exact close of the candle. So I have it set to alert me when the candle closes. And so let me show you how to set alerts really quick. So if you click here at the alert icon there, and then you go to the Zack attack indicator, you'll see the 4 kinds of alerts that you can set. You can set a buy signal, a sell signal, upside PR, and downside PR. Let's go ahead and check an upside PR, okay? What you want to do is look at the trigger criteria. If you do only once, as soon as that alert goes off, it's never going on again. We don't want to do that. We want this to be a continuous alert. If you do it once per bar, every time you get a bar that has an alert flashing, it'll give you a notification. This is the one that I recommend, once per bar close, because what this does is it only alerts you if the candle closes and has the signal intact. Otherwise, you're going to get some alerts that when you go back to your chart, they're gone because the signal criteria are no longer met. So once per bar close will guarantee that you only get signal alerts for candles that close with the signal intact. And then you can modify the alert name and the message as you want. So what I typically do in terms of a watch list is, for example, today Amazon. So we had ER for Amazon yesterday, and we had a less than the move was implied, I think, at 7 or 8%. We opened at a 3% move, so we had the move was less than what was implied. So there was opportunity there to play the IV flush and look for some movement in Amazon. There's going to be interest there. So I didn't have Amazon alerts on the indicator before today, but today I added them in the morning just because I figured that we would have some movement on Amazon. So I'm actually going to remove those alerts later on because I'm not concerned with playing Amazon anymore. It was just a watch for today because they had ER. But I'll typically have alerts for NQ, ES, SPY, and QQQ, and then occasionally Nvidia or Tesla, depending on what I'm looking to trade. But what I recommend is probably focusing on just 1 or 2 indices, maybe 1 or 2 individual names, and then honing those down, learning their price movement, and then kind of specializing in those. And that way that you can kind of have a better success rate instead of jumping around too much.
Actually, yeah. So Donnie, George, all those, everybody except for like only a couple kids.
All right. Any other questions? These are some great questions. So I don't do commons, I do options. And then I also do futures. I use Apex Trader Funding, and I trade on their performance accounts. And then I play options. I've been trading options for probably around 3 years. I've been trading for 4.5 total. I started with commons and then I moved to options because if you see here, I scalp. Scalping commons is not very lucrative unless you're playing with millions of dollars, which I'm not. So I like to use options because I can scalp and then I can use, theta can work against you or can work for you. So the invite option for the indicator, so you would have to sign up through WAP for the Zack attack indicator, and then it'll have you put in your username, and then you'll see it here under invite only indicators once that's complete. So determining the SPY range for the day, I don't necessarily. So Zack he looks at SPY, he'll look at he'll kind of take, for example, Let me look at, let's look at QQQ. We can look at SPY later. So some ways that people determine range is they'll look at pre-market high and pre-market low. So for example, pre-market high was here and then pre-market low was here. So if I just draw a giant box around pre-market high and low, you'll see that we actually traded in that range for the majority of the day before we broke out for FOMC. So if you mark pre-market high and pre-market low, which they're already marked on your indicator, that can give you an idea of where we would probably be range bound unless we get a significant move in one way or the other. So if you just waited for pre-market high and low to be broken, we didn't break them at all in the day, and then as we kind of went up past pre-market high, we broke into some uncharted territory to the upside, and we had a pretty explosive move. So that's one way you can kind of take a look at range. There's other ways you can look at range. There's something called ATR, which is average technical range or true range, I'm not sure, but what it does is it takes the average movement that a stock has every day, and then that's your ATR. And so just using averages and probability, you can see the general range that a stock has for the day. Yeah, so you know what? We can take a look at some small caps. That's a good question. So let me go to Webull, and I'm going to go to the market, and I'm gonna look at today's let's see, most active stocks. Okay, so CTMX. It's not meant to work on small caps. So if it does work on small caps, I would be impressed. But we're gonna be exploring this here. CTMX. Okay, it's not terrible, right? We got a long signal here in pre-market, nice explosive move up. Short signal, but it was on VWAP, not much there. Long signal, and then we rode the EMA clouds to the upside. Let's take a look at the next highest volume small cap, which is ACAN. This one looks tricky. Yeah, we got a short signal here. PR there, not much movement. That one didn't have too much range. Let's take a look at NEO. Okay, this PR pulled back a little bit into the clouds. This was a really good PR actually on NEO. Look at that right here. This PR pulled right back into the clouds. Short signal at the end of the day, had a little move after that, but that's not terrible. So it does have some use cases for small caps. Of course, it was designed for large caps. Okay, there's no movement on that. Let's look at Carvana. Will be the last one I want to take a look at, just because you got me curious. Okay, let me that big after hours move kind of screwed up my chart, so let me expand my chart here. Okay, let's zoom in. A little bit of scalp opportunities here. All right, we got this little PR bounce into the clouds, PR here into the clouds, short here, little movement on that short, long here into supply. PR didn't really mean anything here and here, so it's tough. It's really meant for large caps, but sometimes it does good. This was nice. This was a PR that caught the exact top of Carvana. You can see this PR fired, and then we had a push all the way back down. So some good signals here and there. Okay, about the Amazon, I just added alerts. I didn't add any, for calls and puts, I'll usually take $1 out of the money either way. So I don't really need to watch too many contracts. So 5 minutes is ideal. Sometimes the 10-minute can be good, but it was designed for the 5 minutes. So I can just take a look at the 10-minute on QQQ, see if there's anything. Oh, that was good. That was a good long signal on QQQ 10-minute here, right before FOMC. But yeah, so 10-minute is okay. I recommend the 5-minute, to be honest. And okay. I mean, it worked out actually on the Amazon, right? So long signal here. The PR here worked out. There was a PR here on the 10-minute. If we just use the same criteria, it actually worked out, right? We didn't get a close above that candle wick, and then we ended up dumping. So up to you, but I recommend the 5-minute is kind of, it's the sweet spot, right? I built the indicator for the 5-minute because that's what I trade, and so that's the optimized time frame. Okay, any other questions? These are all good questions. No, so I wait for the candle to close on PRs. So set your alerts for the candle close, not at any time, because You don't want to act unless the candle has closed with the signal conditions intact. So always the candle close, and then the candle after is when I would look for an entry. Nope, this is an all-inclusive indicator. So watch what happens when I remove this indicator. Completely bare chart, right? There's absolutely nothing on my screen except for the candles, and then as soon as I add the indicator, everything's there. So the idea was to kind of create an all-inclusive indicator that has full customizability. So if you want to add or remove anything, you can actually make this as simple as you want, right? So let's say all I want is the signals. I can remove every single thing off of here. I can remove my EMA clouds. I can remove my supply and demand zones, right? If I just uncheck these, right? So look at that. I mean, I just made this almost completely bare. And if I want to actually get rid of these support and resistance as well, I can just make this an arbitrarily high look back period, and then you'll see these levels go away. And then all I have is a bare chart with the signals, right? Don't even need, so you can make it as complex or as simple as you want. So I don't use fibs necessarily too much. I actually do have a little indicator that I created that can automatically plot fibs here that adjust as, time moves. So that's pretty cool. But if I'm drawing fibs, I'll just draw them from like swing low to swing high. So for example, I can draw this fib here. But I don't usually use fibs as my price targets. I'll just use support and resistance, supply and demand, and then our EMAs. And let me add it back so that everything's reset, and there we go. All right. Any other questions before we got about 9 minutes, so I can cut it early if we don't have any more questions, but if you do have one, just feel free to throw it in the chat. Yeah, so it depends which market data is essential. If you're looking to trade tech, you probably want NASDAQ. If you're looking to trade SPY, you want ARCA. And so they do have some all-inclusive packages where they will give you, NASDAQ, they'll give you CME, they'll give you ARCA, things like that. But if you actually go into TradingView, they'll tell you what data is included. So yeah, the supply and demand indicator is on this chart. If I click the replay button so I can show you the labels, you can see right here we have supply and demand, right? It's built in. How to figure out a dump on SPY? Well, it's hard to predict exactly, right? Nobody can predict most of the time, but here we can at least see where did we dump on SPY? Well, we had a double supply zone. You'll see 2-day prior, 5-day prior. So basically we have a stack of two resistances. We can even draw and overlay this resistance formation just from the candles themselves. And then you can see that we have these top wicks. We're trying to get through this. You can think of it like a ceiling, and we're failing multiple times. Volume pickup on this rejection, and then we started to reverse to the downside. So there's a few tells that you can see there. I mean, of course, if you were listening to FOMC, you'd have to try to interpret what he was saying and see if it was bearish or bullish. But just given price action, you can already see price had a hard time getting through this area. We were extended, and so we started to pull back. Yeah, once you subscribe through WAP, it'll ask you for your TradingView username, which you can find at the top left corner here. Put that in, click on claim indicator, and then it'll automatically add you. If you don't see yourself added, just DM me on Twitter. It's just Stockman Trading, or if you just reach out to me in Discord or something, just easiest way is to DM me on Twitter so I can see it, and then I'll make sure that I add you. So it should do it automatically, but I'm also here in case you need some additional help. I don't have an indicator that I would recommend for small caps. You can use this to some extent, but you might have to play around with the settings a little bit. I don't know. I don't trade small caps, so I'm sorry I can't help you there. And to be fair with you, small caps, a lot of it is driven by less technical things, more so, volume, hype, FOMO. A lot of these small caps are driven mainly off of attention rather than just technical criteria. So. Yeah, no, I'm glad. Hopefully this was helpful for you guys. Got a bit longer, a deep dive into it, an hour as opposed to a few minutes. And I think I covered, pretty much what I would cover in a YouTube video or whatever you could watch. So I'm gonna record this and then post it. If you want to watch it later, you can rewatch it later. Yeah, Bull, I'm gonna record it and I'm gonna upload it to my YouTube channel and then I will link it in the announcements channel. I recommend the Pro Plus subscription on TradingView. I recommend whatever subscription allows you to have real-time data. I know you can't do it on the free subscription. I don't think the essentials. So I think Pro is the one that you'd want, but I would just read the description under TradingView plans. I'm not sure about the Mag 7 IV. You'd probably have to look at the IV for each of those individually and then figure it out. But yeah, I don't know how to do IV for a group of stocks. So a free TV will work. I just recommend having the real-time data. But yeah, free version, it'll work fine. Yeah. Yeah, that's a really good question. So actually, I think it was probably the other way around. So I had analyzed the market for so long, but it did have me kind of think deeper about my technical analysis because it made me think, okay, I have certain TA that I do. How can I actually factor this? How can I code this into using PineScript? How can I translate what my eyes are seeing into code that can do it automatically? So it made me think deeply about things that you wouldn't normally think about, which is like the ratio of candle wick to candle body, how extended is the trend, things that you kind of just look at and inherently understand, but you don't think of on a deeper technical level. It definitely had me look into that. And then once I was able to see that as I understood the market better, I kept changing the indicator to adapt until, refining it over and over until it was as accurate as I could possibly make it. Real-time data, whatever you trade. So just go into the additional market data and look at what it says. And if you trade SPY, get ARCA. If you trade futures, get CME, etc. It's important because think about it, you want the most recent data and the most the data directly from the broker. Yeah, no problem. I'm glad you guys enjoyed it. I love doing this. This is my kind of passion project. It's what I do on the side, and I just love trading and just doing just coding in general. So if you have a question, don't be shy to reach out to me. Dark pool data that's outside my area. There's a lot of data brokers like Unusual Whales and TraderLink, things like that, who can give you dark pool prints. But that's not something that you can just get in TradingView. I don't trade full time. I do make more money trading than I do at my regular career, but so I'm a systems engineer. I lead a systems architecture role at a DoD contractor. So I'm actually I can trade while I'm working, and these alerts, I don't have to sit and stare at the chart every day. So I trade and I work, and I like working over trading full and not trading full time, because if I did a little stint where I traded full time, and you can ask some full-time traders. It's isolating, right? You're at home all the time. You're not interacting with people. It's more stress because you're relying on trading for all of your income. So if I have a career I enjoy that I can also trade while at that career and make good money, then I'm going to do that for the foreseeable future. And so the success rate, usually it'll vary from typically like 70% to 80% depending on market conditions. If it's really choppy, we can see high 60s in the win rate, but it's usually between 70 to 80, but there's small wins, right? There's scalps. So it's higher win rate but less profit. You won't see, if you play the indicator scalps correctly, you're going to have modest profits, but they'll be more frequent. That's kind of how I approach it. All right, we have about 2 minutes left. Any other questions? Yeah, so I've since I started this indicator, it's on version I think 257, and it's over 1,200 lines of code. So people don't see what's under the hood. It looks pretty simple, pretty clean, but yeah, I mean, I spent hundreds of hours working on this, so I do update it. So, and I will be posting this on YouTube, yes. I started coding this indicator about a year ago, and I've just kind of been modifying it as we go. And then I met Eddie, Zach, Morris, and we became friends and we collaborated together. And he's got a good audience and he wants to help people. And so we're like, hey, let's bring this in more people's hands and see if he can help them trading day to day. So it works better with real-time data and paid trading view. I haven't back tested the free version, but I mean, I can only recommend getting the most accurate data. It would be wrong for me to recommend that you don't have the most accurate data, if that makes sense. But it still works on the free version. You're welcome, Priya. I don't use algos. This is, I don't automate my trading because there's still things that you want to analyze as a person that you can't code in. So I still, will take the trades myself and I don't use any algos. And I enjoy trading. I don't want to automate it fully. I enjoy, getting looking at the charts and then having a prediction and it come true, things like that. So I haven't gotten to the point where I've built like a trading bot, but this is kind of more like a trading aid. That's how I view it. Thank you, Ivan. Yeah. That's true. There's a lot of good minds in this Discord room. A lot of people who know what they're talking about. So it is 8 o'clock. I'll take a couple more questions if you have them, but I think this was a very productive session. And if there's no more questions, I'm gonna stop the recording. I'm gonna process it. I'm gonna upload it to YouTube, and then by the end of the night, I'll try to get it into the announcements channels. I think Pro should be enough. Yeah. I play 0 DTE. Yeah, I wouldn't know who to recommend to follow. Just kind of do your due diligence on people on Twitter because there's a lot of fraudulent, activity on the space. So vet the people, make sure they're posting P&L and they're not just, showing you a Webull card and nothing else. So just be careful who you follow. Just make sure they're knowledgeable. Don't allow people to use you and dump contracts on you, things like that. So just be careful. Wow, voice cracked. Ivan, I would make sure that you can get the real-time data on that plan. It should tell you, but I think Pro or Pro Plus should be enough. I think my bio on X might have a promo code for TradingView that will give you a discount on one of the plans in my link tree. There are alerts built into the Discord. I linked the 5-minute alerts for SPY, QQQ, NQ, ES, Tesla, NVIDIA. They're all linked to the Discord. So if you purchase the indicator, it'll give you the role that will allow you to actually get the Discord alerts, which are the same as the indicator if you want to get them that way. Get plus. Yeah, get plus. My Twitter is @stockmantrading, so it's just but if you look at my Discord, there's a link on my profile. All right, I think that's good, guys. I think we're gonna cut it off there. It's a little over an hour, but that was great. So hopefully, you guys enjoyed it, and I'm very open. Feel free to DM me, reach out to me, email me, whatever you want to do, and I'll try to respond as soon as possible. Thanks for joining. We didn't have a huge number of people, but I think most people are busy. It's a weeknight, so I'm gonna record this, and then I'm gonna get it out to get it on YouTube. So thanks, guys. Have a good rest of your day. You're welcome.